Hi, this is Joe Rabil with Rabil Stock Research. So we're going to start out today talking about the simple moving average and the many uses of it, and just kind of understanding some of the details related to using this 18MA. All right, once we do that, I'm going to go through all the market conditions. We're going to take a look at if there's been any changes of significance and what the risks are right now in the market. And then next, we're going to look at the symbol requests that came through. There were quite a few that came in last week. And then I'm going to give a few ideas of my own. Let's go ahead and get going. Before hopping into the chart, I want to take a just quick run through the uses of the 18MA. And again, as I put in here, you can use the 20 if you want. I'm going to show you why it doesn't matter in a minute. But we can use it to help define the trend. And I'm going to show you why it's such a good length time frame for defining the trend. Then we're going to look at how it can help determine momentum, especially when you combine it with the 40, but even by itself, it can help with that. And then also it's a good overbought, oversold indicator as well, something we can use to quickly view whether a stock is overbought or oversold. And then it can help with location of support and resistance as well. And then I also use it as a longevity signal. If a trend has been in place for a very long time, then we know it's probably getting ready to end. Kind of like what's happening with the daily chart. So this is a daily chart up here on the right with the 18MA. And what I've done is actually overlaid the 20 in green. I wanted to show how there's really not much of a difference. I've done it on all 4 time frames. So this is an hourly, a daily, weekly in the bottom right, monthly in the bottom left, right? Now, on the daily chart, you see how long this has been going on? So it's almost like if you're, looking at this and saying, how long can this go? I mean, a daily chart doesn't usually last this long without breaking the 18. So I would not be surprised if, we're getting, at some point, we're getting pretty close to that taking place. All right. But I wanted to go through some of these important ways this can be used. Look at how when you get stretched away from the moving average, it can work its way back. It often works its way back if you get pushed away. Now, sometimes it takes a little while before we get it to come back, but it does give us that sense of whether we're overbought or oversold relative to the moving average. You could almost think about it like pulling both ends of the moving average so that it's a flat line, and then the stock's oscillating above and below that. And you could think about it that way, and I think it helps to make more sense. Now, I don't use any kind of calculations with that. I just eyeball it. But if we get far away from the moving average, you start to think it's going to work its way back in terms of, reverting back towards that MA. All right. Now, when we talk about it with relationship to the trend, I kind of look at it like once you identify that we are holding the line, we come back and we hold the line, we support, and it uses its support. You sort of assume it's going to stay that way until it's clearly broken to the downside. Okay. And then once that happens, you sort of assume it's going to be intact until you clearly break it back to the upside. Now, this is a kind of an awkward signal here, but the reality is that it happens in all time frames. And you can see how last year, the 18-week was really the time frame that was in control. I mean, through this entire period, it was the weekly 18MA that was controlling the trend. This year, it's been the 18-day. The 18-day is in control at this point. It's not the weekly. You're not checking back to the weekly chart and testing it at all. All right. It's only happening on the daily chart right now. If we break that, then I think we have some risk down to the 18-week. All right. We'll talk about that a little bit more as we go through the S&P. So, we think about that. And then it's pretty obvious when you think about support and resistance. Now, the way I look at it is I call it trend support and trend resistance as opposed to price support. So this would be price support, and trend support would be the rising moving average. Okay. Now these moving average lines, they're bendable, right? They can bend, but a lot of times they won't break. So it's not like they're a pane of glass that if you break through it, it's over, it's shattered, the moving average is shattered. If it's still rising, it still has some force in place. So those are just a few ways that I think you can use this. And I wanted to make it really obvious that if you want to use the 20, you can use the 20. The difference is really not that big of a deal. I use the 18 because the slope starts to shift a little bit more quickly. So I get a day or two advance advancement in the slope of the line. That's really the main thing that I'm looking at. But just you continue to use it. So if I add this and I'm looking at the momentum of the trend, so you see how this has some movement? If I had the 40 up here, I could see that that's rising along with it, and then I know that I've got a pretty strong trend in place. But you can also use the slope of the trend. If it's starting to rise like this, then the momentum isn't all that strong. But once it starts to move, and it's at about, like, I kind of think about it like almost like a 45-degree line. If it's, if it's moving up, if you divide the paper up and the chart up, and you divide it up and look at it from this standpoint and say, okay, it's moving up at about a 1 to 2 pace in the way that the slope is designed, then I've got a very, very strong trend, a good momentum behind the trend. Once it starts to go vertical, right, then the trend to me is not as strong. It's getting more on the exhaustive end. So we kind of want to avoid the periods where we are at, it's just starting to rise, and where it's starting to rise at too strong of a rate. All right. If you find that spot in the middle, then you're in a really strong momentum condition. And you can use the 40 to help you support that thesis. And I think that can be very helpful. All right. If you're enjoying the content, hit that like button and also subscribe. So I'm on the services page of RabilStockResearch.com. At the top, you can see I've got my advanced trend and momentum courses. There's 3 different courses. You can get a discount if you buy them all as a bundle. They are lifetime access now, all right? And also, the individual package has about 3 to 4 reports that come each week, plus a special video for that package. And I also do a once-a-month webinar that is very popular with the subscribers. So you can take a look there. If you're interested in just getting started, you can go up to the top and hit the book. This will give you information on the book. It gets you started on the approach. Got my weekly market conditions up on the left with the chart of the S&P or the SPY on the right. But I want to quickly run through the market conditions. So the sentiment number, I use the Investors Intelligence Sentiment Survey. It dropped to 37. The bulls actually dropped off their peak this week. And so it dropped from 42 to 37 this week. It's not a significant thing. And the fact that it dropped under 40, I guess, is significant. But the fact that we moved up above that 40 level is negative. And I'm keeping it negative right now. A lot of times you'll make a peak and it can still act as resistance. But the fact that this dropped off so fast still tells me that there should be a backdrop of support if we do start to pull back. All right. I think the risks in the market are more short-term oriented. All right. I think we do have some risks, but I think they're more short-term oriented. I'll get into that a little bit more as we get into the charts themselves. Now, overbought, oversold oscillator is still up at 83. It's not really changing very much. Obviously the market just remains pretty resilient here, but at some point this is going to have to pay the piper, and we have to move our way back down. And I would say even if we got back down to this neutral area, that would be a pretty good sign and alleviate this condition, this kind of short-term risk condition. So both of these are negative. Most of the rest of the conditions are bullish or positive, and to me that says that any kind of risk from the sentiment and the overbought, oversold are short-term oriented is the way I would be looking at it. All right. Let's go ahead and, well, actually, we should go through these. The trend on the monthly, weekly, and daily is still all positive. Momentum is positive for the monthly and the daily, and the weekly is neutral. And then the volatility is still positive for both the weekly and the daily. Let's go ahead and run through these quickly. You can see what's going on. The average true range on the weekly chart, this is the black line, is dropping. And then the moving average is also dropping, the 18 MA of that moving average. So when that's the case, when the volatility is declining, to me, that's lower risk in the market. That's a good sign. It's something that we want to be on the lookout for. It's a positive. On the daily chart, you have declining volatility, and it has been that way for quite some time. And you want to take advantage of the pullbacks that you get and have had over and over again when the condition is in place like this. Every time this RSI drops down under 50, you kind of want to be looking at that as a potential buying opportunity. All right. Let's look at the let's look at the 4 time frames. So I've been mentioning how, we're just not getting a pullback, not even a red bar on the monthly chart. It just keeps moving, powering ahead. And, the risk of a market, the government shutting down doesn't seem to be having a great effect on the market here. It's not like it's causing some kind of a big rupture or anything like that. So I'm kind of feeling like, especially if the daily chart goes ahead and breaks out here, that this chart is just going to keep powering ahead and probably moving up towards that 7,000 area, which is the target I've been giving my subscribers. So that's kind of what I'm watching for. But it would be really nice if we got a red bar. If we got a red bar, then that could actually potentially set up the more upside in this trend, really, because I think those pauses that refresh the trend are really bullish. The one thing I don't like about the way this is playing out is that this keeps moving higher, and it's not moving up, pausing, and then powering ahead again with another move, like any kind of extended move. It's just running, and it's not creating a whole lot of signs of momentum, at least based on the ADX. So that somewhat is concerning to me. I have a hard time believing that this can last that much longer. But the key thing we need to watch here, all right, and this is a very rare statement for me. I deal with institutions all the time, so I will rarely use the 18-day line as anything of significance. It's usually not that important at all in reality. So, but when you have a line that has been tested 10 times over the course of since May, essentially, we've gotten tested 10 times, all right? And we have successfully hit this line, bounced off of it, and moved higher. Yeah, we've had a few attempts at a gap, but we never had the follow through to truly break the trend in these, all right? So until that happens, and really what happens when you break this line, it typically will roll over, and we haven't seen that again since it turned up in May. So I think these are all, pretty significant things that we need to watch this line. Now, if this line breaks, if we get a true break of this line and it starts to roll over, then we actually have some risk down towards the 18-week and potentially the 18-month. If it plays out in a way where there's some violence to the reversal, meaning there's some volatility there, increase in volatility, and there's also if there's an increase in momentum to the downside, we get signs of sellers showing up. If we get signs of sellers showing up, it's very possible we're going to finally fill in this area here that we haven't been able to do all since the bottom, really. All right, we haven't tested the 18 since we crossed it in May, and we haven't really crossed it since, pulled back since the low. It's just been kind of moving higher. So a lot of people must have been left behind, and we'll see if some of these people have finally gotten invested or not. All right. Okay, let's switch over to the. We're going to go through some symbols now. I've got my setup with the monthly in the bottom left, weekly bottom right, daily upper right, and then another weekly with my zigzag chart that forms this price structure. I'm going to go through a few stocks like that, and then also the relative strength and the relative strength index, RSI. All right, let's look at the IWM. We've got, I think, an important thing trying to develop. Now, I mean, you can see from the price structure, we formed a V bottom off this low. We went to a new low, kind of took out some bottoms, and then reversed straight back up. And now we're fiddling up with, up in this area of the old high. What's missing is some strength, some real strength. We've gotten some improvement, but in order for this to be confirmed, we're going to need to see this turn up to the upside. And it actually is going to have to probably push really higher. Normally what I'm looking for actually is a 1, 2, 3 reversal where you break the trend, right? You get a strong move that breaks the trend to the upside, and then we make a higher low, and then we turn back up. So to me, this is somewhat premature in the way that it has developed, but there is sign of improvement because this is a pretty strong move off the low after coming down into support. So I think it's encouraging, but we're going to need better momentum and better strength on a relative basis versus the S&P. I think if we're going to really see a move that's going to start including a lot more stocks, all right, if we're going to get an expansion move in the marketplace, all right. All right, let me go through some of these requests that came in. So a big, huge dynamic move to the upside. And if you notice the way this played out, I'll do this on the daily chart. It's probably the easiest to see. We had this big, huge swing to the upside, right? And we got that swing. And then we had this swing to the downside, and then we moved up. Now, once this turned down, we created an inside swing. You see how we made a higher low and a lower high, right? And then we make a move up and another move here, and now we created another inside swing here, all right? So this is kind of compression forming, and now we're actually look like we could be forming another one of these, and it's very possible we will because of how big of a move. So what happens is you get these really dynamic, massive swings, these high volatility swings, and then they work their way down and they kind of work off the volatility, and then they get going again. So I think this is actually getting pretty close to maybe starting something new. If you notice, the MACD has been holding the zero line, and overall the buyers are still in command. The buyers are still above the sellers. Red DI has not been able to break above 25, and the volume pattern actually looks okay. So I would be favoring this as a potential stock that has that potential to move up again. But I think you're going to have to watch this closely on the daily chart, maybe down even to an hourly, to get an entry in this thing. The other way you could look at it is just kind of sit back and look for this to take out this prior peak up here, right around the 64 area, something like that. And I think if we could do that, then I bet it gets going to the upside. So a couple different ways to look at it. You could be looking for an entry in this area using the hourly chart. But you could just sit back and wait for a new move. Now, I do think this is going to have resistance at 100, around 100, something like that. So I wouldn't be in the position where you buy it and just forget about it. I think you're going to have to trade it. I think a lot of people got left holding the bag up there, and they're going to provide some resistance. All right. EQT, so this is one of these gas stocks that had a really good move and got things going, and then it really kind of stalled out. But if you look at the way this is played out here, all right, we broke out above this high, this kind of big base area, the high from 2022, and it had a really nice looking overall price structure. And if you notice, we've basically held that area. What was resistance is now support, okay? And we've got pretty good momentum behind this play. Now, what's negative about the way this is set up here is that essentially what we've done, let me just show you this. So we've broken the uptrend line. All right. Now, that doesn't mean that we're starting some kind of a big down move, but typically what happens is when you do that it's in a transitional phase. So you break the downtrend line, and then what you do is you kind of channel sideways a bit, and then you can reemerge. I don't think it's going to happen in one shot. We come down to the zero line on the MACD and it just takes off. I don't really see that, but I do like the way this is playing out with the MACD and the ADX. I just think what's more likely is we make a lower high and a lower low, and maybe even a lower low, or just come down and test this low again, and then we could be ready. But I don't think it's quite ready yet. Definitely one to keep on your watch list, but I would be looking for another test of 50 before this is really ready to go. EQNR, another energy stock that has worked its way down on the monthly chart. It hasn't quite turned above the 18-month line, but it wouldn't take very much. If we look at this here, this is the 18-month line. Somewhere around 25, 26, I think, is a key level to monitor. If we can get back above that, now what I would be looking for on the weekly chart is a really strong move to the upside. Get some dynamics behind this move. We want to see this ADX kicking into gear. We want to see some separation between the MACD and its signal line on a move to the upside, just showing some real strength, and then we could look to play the next pullback after that. So that's probably what I'd be on the lookout for. Okay, FLNG, another one in the marine transportation. So we've got a move where this time we're actually getting above the 18-month, but again, we don't have any momentum behind the move. So I kind of would play this the same way. Looking for some strength, maybe up to 30 or something like that, that gets the ADX going, gets a little bit more strength in the MACD on the weekly chart, and then we could play the next pullback. I think that's what I'd be on the lookout for. Now, I will say what we've done so far, we've made one higher low and one higher high. All right. Now, if we make another higher low, that's two higher lows. And, the saying is that two higher up and up she goes, right? Two higher lows and up she goes. Or just wait for this to confirm and complete the reversal of the trend. And if we make another higher high after making the higher low, then we know we're in an uptrend. All right. And then you could look to play the next pullback. So because there's not a lot of momentum behind this, I might wait for the confirmation in the trend and then look to play the next pullback in that one. All right. USAR. Not a whole lot of history here, but I kind of like the way this is playing out. I do believe 20 is a very important level. I think if we can take out 20 with some strength, look at the volume pattern in this. This has got really good volume. So, I wouldn't have a problem pre-guessing this based on the volume pattern. But the problem is it doesn't really have any kind of a pattern here on the, so in other words, if this made a kind of move to the upside and then pulled back in an orderly way, I would, based on what the volume is doing, I probably would have an interest in playing this prior to the breakout. But at this point now, I think I would probably be just waiting for this to get through that level. All right. SAP. So we've gotten a really nice pullback to a rising 18-month line. You see how we had this strong trend and we're pulling back to that 18. I showed you all the benefits of this indicator at the beginning here. But what I would say is that we've reached this level and then we got this indecision bar, this doji bar that developed. That's a really good sign when you reach that moving average and that happens. Now, we got a little overrun on the MACD on the monthly. So typically when I see that, I think we're going to move up and come back down. I think that's the way this needs to play out anyway. It needs to come up and then come back down. And if it does that, coming back up through 300 could be interesting. I don't dislike the way this is setting up. In fact, I'm kind of attracted to it, but I do think it'll take a little bit of time. I don't expect this to just turn and go. All right. I think it'll be a little bit more work before it's ready to do that. FCX had this pattern that developed, right? So we had a new low to a new high, and then it made a higher low. Now, if this would have gone and made a higher high, then we would have had the price structure we're looking for. But instead, it failed there and made a lower low. So it's a failed bullish pattern, really kind of a negative, especially when you see SCCO breaking out to the upside. So I think this is caught in a range now. I don't know that there's a significant amount of downside. I just don't know that there's a whole lot of upside in this either. But let's take a quick look. I've got a couple of stocks that I think look interesting. So one of the patterns that I talk about with my subscribers, and this is one of the highlights from my report this week, you get this strong move to the upside with good momentum characteristics, and then you get this pattern consolidating back where the moving averages are consolidating. We get the zero line reversal, and this is starting to turn into a low ADX situation. Look at the big reversal taking place on the monthly chart. So a lot of the charts that I highlight have this big reversal pattern, and then we got this, trading play. We get a pullback to a rising 18 with an opposing trend signal here on the daily chart. So definitely one I would be watching. Look at OSK, same thing. We're getting a pullback to a rising 18. Now this was a little bit more steep. It's causing the MACD to cross over. So we will be talking about this moving and coming up and coming back down, forming some kind of a W. But because the momentum's good, we definitely want to play it. Look at the size of this big base that it's coming out of. And again, we get this opposing trend pattern on the daily. So we're going to be looking for something like this, a move up and then a higher low. And if it does that, then I think this looks pretty attractive. And then finally, VNT, this had a really nice move to the upside, again with good momentum, with a nice pause. This doesn't have any selling pressure at all. It's just taking its time, working its way back. Now these moving averages have come together. We're getting a lot closer to the 18-week line. Definitely a name you'd be watching here for either a trend line break or a recross of the key moving averages. Thanks for watching today. If you have any stock requests, you can send them to stocktalk@stockcharts.com or just put them in the comment area below. Also, if you want to learn more about some of these techniques, you can go to my YouTube channel. Have a great week, and we'll see you next time.